All right, everyone, we're about 2 minutes after. We'll let people continue to come in as they join. Thank you so much for spending perhaps your lunch hour or your early morning together with us today. This seminar, we think, will be about 30 minutes in length. Again, if you have any questions as we go along, any information we haven't covered, please put it in the Q&A. We want this to be an interactive session with all of you so that you can take away something yourself personally from this. So today's session is, what is the easiest type of real estate to be investing in? An exciting topic, one that we get on a daily basis. And we're going to cover things like, some of the investing basics. What does that look like? What are the different forms of real estate investing? What are the easiest ways to maximize not only your wealth, but to minimize your strength? And then we'll cover some of the pros and cons and easy ways for you to start investing in real estate. So Nish and I are both agents with REMAX Wealth Builders. We specialize in pre-construction properties, but also have strong resale divisions, both in the Toronto GTA markets, as well as Calgary now too. So we can service any of your needs in both of those markets. In Calgary alone, we've helped over 1,000 people from across Canada to invest in the last 3 years. We have sold over 300 million worth of Calgary real estate, pre-construction real estate specifically. And our team has invested in over 20 pre-construction units. I think that's a record. I don't think there's another brokerage, another team out there that has more than that. And that just shows you we put our money where our mouth is. We believe so strongly in the real estate investments that we're advertising and promoting that we are putting our money in them as well. So Alex Wilson isn't on the call today, but he is our broker of record. He has been a real estate agent for over 15 years and has won many different awards through REMAX by being a top selling agent. In 2022, he was in fact the #1 REMAX agent in Canada for the number of transactions that he did. A pretty amazing achievement. And we like to be transparent here at REMAX Wealth Builders. This is what Alex's portfolio looks like. It's a pretty substantial portfolio that he has grown over the last decade, primarily in pre-construction units. And this is something that we teach people how to do, is how to grow from that one deposit, because it all starts from one. You got to start by that first property, and you can grow that into a multi-million-dollar portfolio like Alex has done here today. I think it's 17 properties or something like that, and worth over $17 million. So that sounds great. There are big mortgages on these today, but what gets me excited is 30 years from now. Using appreciation at just 3% price growth, that portfolio will be worth over $42 million. That's a pretty amazing achievement. Now, not everyone has to do that. A single property can be life-changing for each one of you on the call. So that's what we're talking about today, is how to start that portfolio and what is the easiest way to be doing that. So introducing myself, my name is Kyle DeVigi. I'm licensed in Ontario and Alberta. I've been an investor for over a decade myself as well, and I now have 7 properties. Those are all pre-construction properties. I previously managed Lotto 649 and Lotto Max draws nationally on behalf of the provincial lottery organizations. And during my time there, I learned that about 1/3 of Canadians were planning to fund their retirement by winning the lottery. That's a crazy statistic. The odds are 1 in multi-millions. Everyone planning on winning the lottery is not going to do it. So I left the lottery because I have a passion for real estate, and I wanted to help and teach people how they can actually build wealth by investing in real estate. And last year alone, I helped 190 people from across Canada to invest in Calgary pre-construction properties. And similar to Alex, I started with that one deposit, $38,000, and turned it into a portfolio of 7 different properties. I've been continually buying these up over the years, one every 2 years. And now my portfolio is about $4.7 million. And in 30 years, that's going to be over $10 million, not including any cash flow or principal repayment on those properties. Because the mortgages, they're big today, they'll be gone in 30 years.
Good afternoon, everyone. My name is Nish, and I'm happy to be working with Kyle and Alex in this arena. I want to begin by First, letting everyone know that I am truly invested in pre-construction properties, especially those out in Calgary. Collectively, I have 7 properties. The first 2 that I purchased were resale properties, and the other 7 were all in the pre-construction phase. And we'll talk about how I was able to do that as we continue. Now, I've been a licensed realtor since November 2020. Won a couple of awards so far, been, in the 1% of realtors for overall sales over the past 3 years. And I've done, a number of sales when it comes to resale in the Toronto area, as Kyle mentioned earlier on in the presentation. And since I've been selling pre-construction, we've done just about 200 sales out in Calgary, again, in the pre-construction phase. And I don't think things are going to slow down. And our goal today, as part of this presentation, is to share with you the reasons why we invested the way we invested and the types of properties we invested in, and share the pros and cons of the different categories that we'll be touching on. Prior to my real estate career, I was the department head for sales and operations for an entertainment company. And unfortunately, we did not survive COVID and had to pivot. Thankfully, my journey to get into real estate started before the pandemic. So I had an exit strategy, but it was really about using real estate to build generational wealth for myself and my family, and also to create my own pension plan, which is what we showed you a little earlier on in terms of the portfolios. So in the spirit of transparency, we can switch to the next slide and we'll talk about the different properties that I've been able to accumulate over the past few years. Again, you'll notice the first 2 properties in 2006 and 2017, they were resale properties. But ever since 2021, I've really focused on investing my capital and the capital of my family into pre-construction properties. And as a result, we've been able to grow our portfolio from 2 properties to 9 simply over the last 3 years, and also applying a very conservative 3% year-over-year appreciation. My portfolio, being valued at just over $5 million today, over 30 years will grow to about $12.5 million. And again, that's only calculating that at a 3% year-over-year growth rate.
So now that brings us to today's topic, and looking a little bit at the real estate investing basics. So in general, why is real estate investing a good thing? Well, you're buying a real asset. It's not Bitcoin, it's not cash money. Stocks are good because you're not buying partial ownership of a company, but with real estate, you're buying the actual asset itself. You control that entire thing. And it allows for multiple different income streams. The biggest one is typically appreciation. That's the property value going up over time. That's typically what everyone talks about, and is typically the largest source of appreciation or profit. But there are 2 other areas where you get additional bang for your buck. One is the income generation. This is the cash flow that the property is generating. Now, from years 1, 2, and 3, it's typically quite difficult to get strong cash flow because your costs are the highest that they'll typically be, because you haven't paid down your mortgage yet. And the rents will be the lowest that they've been, because rents generally go up over time. So real estate is like a fine wine. It continues to improve with age. And that's where eventually your mortgage costs, you'll start paying the principal down or the balance down, and interest rates will eventually go down. It's cyclical with the business cycle. So there will be opportunities to lock into significantly lower interest rates. So rents will also continue to go up over that time as well, especially if interest rates stay high. So with mortgage rates coming down, with rents continuing to go up, you can really start to generate some very strong cash flow potential on your properties. It just takes a little bit of time. And the other piece that everyone forgets is, even if it's cash flow neutral, meaning the rent that you're getting is covering all of the expenses of the property, a portion of your mortgage payments are actually principal repayment. You're building equity every single month. You just don't get to see it. That's not in your bank account, but that is slowly building up over time. So fantastic ways to be building multiple income streams in your one single asset. And it also allows you to diversify. Don't go buy 10 pre-construction properties tomorrow. Investing in real estate is part of a balanced portfolio. I am very, very heavily invested in real estate. That's how I've chosen to do it. But it can absolutely go hand in hand with a stock portfolio, with gold, with Bitcoin. It doesn't need to be all or nothing. And the leverage piece of it is what really gets me excited as well, because eventually when you close on the property, you're going to have to put down 20%. The bank is going to fund the rest. You're using that money to finance the purchase, but you're going to be getting appreciation on the full purchase price. So for every dollar that the property goes up, you're actually earning a return of 5 times on what you've invested, because you only have a 20% deposit down. So with very basic gains, say 3% price growth that Nisha and I mentioned, that's actually a 15% return on the money that we have invested. And that's very conservative. In areas like Calgary, resale condos have gone up 19% year over year. So that's how Nisha's done it. You can balloon and really grow your portfolio very, very quickly. And we can show you how to do that. There's also tax benefits from it, because if you're a long-term investor buying and holding, then the profit that you're making is going to be taxed as a capital gain. So you're only paying 50% tax on those investments. Very tax efficient. Now, Nish, why don't you talk about the different forms of real estate investments?
Yeah, absolutely. So there are multiple forms of investment opportunities when it comes to real estate. But the two that we typically talk about, I would say 95% of the time, would be pre-construction and resale properties. Well, spelling error, that's my fault. Now, there are other more complex forms like REITs and syndicates, real estate syndicates that you can be involved in. But those topics will probably be better discussed in a later webinar where we can actually dig into the details. But we felt best to kind of focus on these two areas. So as I mentioned, my initial investment was in the retail space because I needed a place to live. Now, what happens when you buy a resale property? Unlike pre-construction, you have to put down 20%, and you need to get a mortgage essentially within 90 days. Typically, your closing period is 60 to 90 days. So you're dealing with some of the issues of coming up with capital right away. And then also you are kind of restricted to the type of terms you can get on your mortgage because your deadline is quickly coming up. Whereas the pre-construction avenue, because your investments are, in many scenarios, anywhere from 2 to 5 years out, your initial capital can be as low as 5%. We have opportunities right now with Truman Homes with deposit structures of 5% for properties that are closing in 2028. So this allows the market to do its thing, allows appreciation to happen. You've only invested in 5% of your own capital. However, the appreciation is happening on the purchase price. So that's really what we wanted to focus on and really talk about our journey and where we've seen growth in using pre-construction as a way to build generational wealth for ourselves and our family. And one of the ways, Kyle, I think you presented a little earlier is the leverage piece, right? Is when your property has accumulated value over that time, where you didn't really have to pay anything, but because the market typically goes from bottom left to top right, that property is going to appreciate over time. And if you work with the right lenders at time of closing, when your property is appreciated at a certain value, some lenders, again, you have to use the right lenders, however, will allow you to borrow a certain percentage of that increase that you have in your property. That's tax-free money, as long as you can maintain the monthly rent it will take to cover the new mortgage amount. You can still do so, but as we talked about, the rental market will increase. So if you're able to manage that extra cost on a monthly basis, you can secure a good value from your property to invest into other pre-construction properties or other investments in general.
Exactly. And I've done exactly this in my personal portfolio as well. And that allowed me to grow more quickly than I would have been able to otherwise.
Yeah, 100%. And listen, I don't have $500,000 sitting in the bank. So being able to scale a portfolio from 2 properties to 9 properties in a small amount of time, number one, you have to find the right project so your initial investment doesn't break the bank. And then you want to select the right properties, working with the right experts, the market experts, and the right developer that produces quality properties that will appreciate to this level, and then be able to leverage that appreciation, borrow against yourself so you don't pay the taxes, and then invest in other properties to build your portfolio much sooner than if you were to maybe invest in the retail space.
Yep, exactly. Great point. And another reason that I like pre-construction is that it's the least amount of work possible. I always say I want to be a real estate investor. I don't really want to be a landlord. Eventually I have to be, but then you're dealing with people, with emotions, and actions that you need to take. So buying pre-construction allows you to just put your deposit down. The unit's not built. You just wait. The builder goes away, constructs it, takes a couple years. If there are delays, people seem to be concerned about delays. I don't care. As long as I get the property at the end, I am sitting making money on my investment there. So I don't have to get a tenant today. I don't have to get a mortgage today. Don't have to get insurance. I don't do anything until actual final closing. So that's why I've preferred condos, because you can get condos closing in 3, 4, 5 years away. And some of the projects that we have now too have 2 and 3 year rental guarantees. So how does it sound to be completely hands off, hassle free until 2031? I think that sounds pretty good. So there are those opportunities in pre-construction. Whereas if you are buying a resale property, you got to do it all today. You got to get that mortgage. You got to rent it out, find that tenant. You got to pay the mortgage rates today as well. And those still aren't very attractive. I think they'll continue to go lower, but it is going to take some time. And the pre-construction properties allow you to do that. So, Nish, what do you think? Any other advantages?
Well, yeah, you can pick and choose the type of investments you want to make. So this way, if you do have the capital, you can stagger your closings based on the projects you're selecting to make it easier to have 3 or 4 properties in 2031 by buying properties that close in different years. So your initial capital is going to be low. You can buy all of them today if you want to, but you could buy them closing in different time periods. So this way, to get your mortgage, to deal with some of the other financial implications of coming down with the rest of the down payment, so on and so forth, you can spread that over time, right? You cannot do that with resale. Unfortunately, it's simply not possible. Now, one of the questions that we get all the time is, hey, someone's comparing a pre-construction property in Calgary, which is, let's say, a 2 bedroom, 2 bathroom condo. We have a few of them that are in the high 300s. And they're comparing that to what the average market has to offer today, which might be in the mid 300,000. I think the last report as of January, average prices for condos in Calgary specifically were about $340,000. You got to compare apples to apples, right? And I'm going to share this because I think that question is going to come up today, but you have to compare what you're buying. Now, the properties on the market today, if you're talking about condos in the city of Calgary, there's only a handful that are built in the last 5 years. All the other ones are, 15, 20, 30 years old. So of course, the value and the dollar price on the resale market is going to be lower. And that's why when you combine the total average of property that are selling in the condo space, they will have a lower dollar value. But let's use a $340,000 condo just as a reference. Comparing that to a brand new condo, again, 2 bedroom, 2 bathroom, that you're going to be dropping $380,000 for in terms of your total purchase price, that's in 5 years. You're only putting down 5% now. And if you only apply that 3% year-over-year appreciation on the property that you're buying today, and then you extrapolate that out over the next 5 years, it's going to be worth a lot more, significantly more. That number won't be the same when you take possession of your property in 2028 and you compare that to a property that's on the market that's much older that you may have invested in thinking that it was a better play, and you compare that to what you're going to get in your hand that same year. So there's going to be a stark difference. So please keep that in mind. You have to compare apples to apples. People are more willing to live in a brand new property that has all the bells and whistles. The warranties are there, the amenities are there. You don't need to worry about your building falling apart because it's 40 years old. There's so many more benefits to dealing with a brand new property. And if you're buying that for an investment, from an investment standpoint, you're going to get a much higher rent compared to those that are, half a century old by the time that you're going to take possession of your property anyways. So there's my soapbox moment.
Yeah, no, those are all great points, Nish. And something else to consider is that number one, vast majority of the inventory, especially purpose-built rentals, is more like 20 to 40 years old, not 5 years old. So significantly older. And a lot of people think, I'm buying the unit today, but the property I could get for resale is only 5 years old. Yeah, but you're not getting your pre-construction property today. That might be in 5 years. So comparing that property, it's brand new when you eventually get it, compared to the property that was 5 years old is now 10 years old. So that's why, there's often a price difference as well, because there has been that depreciation, that wear and tear on the existing unit. In 10 years, you're going to start needing to repair things. Appliances are going to be breaking down. Just bathrooms need to be remodeled. Flooring can get damaged. All sorts of wear and tear on the property that you're starting to look at as you get into, an aging property, 10, 20 years old. For a new property as well, it's covered under the new home warranties, depending on which province you're in. Say Ontario, it's Tarion. In Alberta, it's the Alberta New Home Warranty Program. And there, it's a 10-year progressive warranty. For the first year, absolutely everything is covered, including the appliances as well. They're under manufacturer warranties too. And then it's progressive 2, 5, and 10 year, slowly going down based on the severity of the issue, with 10 years being structural components. So you do not get that with a resale property. Normally, it's kind of buyer beware. You need to do your inspection, make sure you've caught everything. Otherwise, it's on you to fix and manage. So
Yeah,
it again
100%.
comes into how active you want to be in investing your time in managing your property. I'm sure all of you have your own day jobs, kids, activities, things to do. You don't want to be babysitting your real estate. At least I don't. I want to be out enjoying life. So I want to make my life as simple and as easy as possible. So pre-construction allows me to do that, because I'm just putting my money down for the first couple of years, don't have to do anything. Then after that, it's typically a condo. That's what I favor to invest in, because it's 4 walls, some appliances inside, not much really goes wrong. The first property that I bought, I got possession of it in 2015. I have had 2 calls from the tenant in those, how long is that? Like 8, 9 years now. One, they got locked out. And the other one, it wasn't even an issue. It was related to the building. So I didn't even have to fix anything. So that is the beauty of pre-construction condos, simple and as easy. Now, you can make more money in other real estate investments. If you want to house hack, renovate, all that sort of stuff, yeah, sure, you can make a ton of money. But you are going to be working every single day, a full-time job, managing that investment. That's not what I want to do.
And how many properties can you manage like that? How many full-time jobs can you layer on yourself?
Yeah, exactly. On top of your full-time job, on top of your kids, on top. Yeah, you can't do it. So that's why I personally prefer pre-construction property investing.
And the other side to that is, not all projects are built the same, and not all developers are built the same either.
Very good point.
For the majority of investors that are looking in the Calgary market today, even though there's many Calgarians and people in Alberta that are now looking to buy property there as well, because they're seeing what's happening in their market, the majority of the people that we deal with are from outside of Alberta, whether it's Ontario, BC, Quebec, and other parts of Canada. They don't have the ability to drive to their unit in 30 minutes to see what's going on. Right. So some of the incentives that are being offered by our developer partner, Truman Homes, will also make this an easy investment for you, as hands-off and turnkey as you can possibly get, especially if you're looking at some of the condo options. Kyle mentioned a little earlier that, the first 3 years of owning a property will probably be the most expensive for you because that's generally where you have most of the costs. Now, when you are dealing with developers that provide incentives like a 3-year rental guarantee, a 3 years with free property management, and 3 years with no condo fees, now you're maximizing your ability to cash flow within the first 3 years because you're not going to have to deal with those costs like you would working with other developers. Yeah, some prices might be different than what you're seeing us offering, but you also have to look at the quality of product that you're getting along with the services and some of those intangible things that you may not be considering as part of the purchase price when you're simply looking at dollar per dollar. So be mindful, right? Both, a Mercedes and a Honda Civic are both vehicles. Not talking bad about either one of them. I've owned both of them, but one is built differently than the other. One will provide a better return on your investment if you decide to resell, even though maybe reselling cars isn't a great example of building your net worth. But you get my point, right? You want to deal with the right and reputable developers that will produce a quality product and deliver when they say they're going to deliver as well, with all the things that they say they're going to deliver. So there you go.
Exactly. And that's why, we really favor Truman Homes in Calgary. They unfortunately only build in Calgary. So BC, Ontario investors, you can't get those in your local market. But Truman is a household name in those marketplaces. They have over 9 billion under development. But what I like about them is they're completely turnkey. Like Anish said, they have so many amazing incentives, probably the best incentive package in Canada from any other developments that I've seen. But the units are very high quality, very well built. They include all the appliances, washer and dryer. And I think all of them as well include things like window coverings. Like, when's the last time a unit in Toronto came with window coverings? Like, never. I had to pay $800 per bedroom so they would put a light fixture, not even the fixture, just the outlet in the ceiling. That doesn't happen out there. So again, that's reducing your stress, reducing your involvement. They come completely out of the box, which is what I want as a real estate investor. And this is breaking as well. On the newest project that's going to be launching in downtown Calgary called Lincoln Condos, launching on February 20th now. Very exciting project. It's actually going to have the highest rental guarantee in Canada, 6.7% of the purchase price. Now, when Nish talked about being cash flow positive, these are fantastic numbers. So with the free condo fees, with the rental guarantee, with the free property management, you should be cash flow positive from day one on these. So that is absolutely what you want as a real estate investor.
Absolutely. Here's a quick comparison. So let's look at a condo that's $500,000, which is underpriced in markets like Toronto and Vancouver, but probably a bit higher on average than what you would pay in Calgary. On a $500,000 property, for 3 years, every month, you're going to be getting approximately $2,800 a month. That's $2,800 a month for a $500,000 property. Now, if you were to look at a $500,000 property in another more expensive market, you're probably looking at maybe not even a studio, maybe a 300 square foot shoebox, and you're getting maybe about $1,800 in rent. This is really where you can build your monthly cash flow. And if you don't want to pay a ton of taxes, you can always slap that at the end of the year onto the principal and work down your mortgage to build more equity in your property. So then you can borrow against that and buy additional investment property if you want to do so. There's many ways to use real estate, especially pre-construction properties, to your advantage to grow your portfolio and to really start building true wealth for you and your family, because just keeping your money in the bank, it loses its value on a daily basis with inflation. So put your money where the appreciation is going to be significantly more than what the inflation numbers look like.
Exactly. And investing in a market like Calgary as well, I see as much lower risk than, say, in the GTA or Vancouver for really two huge reasons. The price point that Nish talked about as well. In downtown Calgary, that new project Lincoln, it's going to be less than half the price of similar comparable projects in Toronto. And you're going to get a lot more rent for that as well. So much so that, like I mentioned, the developer is so confident they can rent the units out, they're guaranteeing that rental over the entire building. So when the biggest developer in Calgary says, hey guys, I am very confident I'll be able to rent these out for these prices, I listen to that. You know, when you have like a $1 billion team behind you, big money, teams of analysts, they know what they're doing, they know the local market, and that gives me huge comfort as a real estate investor. And it's a fantastic way to protect your investment because if the unit's empty, you still get paid by the rental guarantee. It's actually the developer who's paying you every single month. So it's a great way to de-risk your real estate investment. The developer's taking on a lot of that risk and accountability there. So another fantastic reason why I like pre-construction and I really like Calgary in Truman Homes.
Yeah. And as an investor, especially in real estate, the dealings with the landlord and tenant board is also something you should consider. Now, Calgary has a surplus, or Alberta has a surplus in their budget. So they are able to have fully staffed government agencies to do the jobs that they need to do, specifically in this example, the landlord and tenant board. In other provinces, simply due to a lack of funding, the backup in dealing with a deviant tenant is excruciating. You may have to wait nearly a year before you're even called to a hearing where you can disclose and talk about your case. And all this time, you may have a tenant that isn't paying rent. Now, what takes about 8 to 10 months to deal with in a province like Ontario or BC takes about 2 to 3 weeks in Alberta, simply because they have the people in place to deal with situations. Now, as a landlord, you still need to follow the rules, of course. And if you are part of the rental guarantee program and there is free property management that is offered, they will follow the rules because they know what they're doing. But dealing with a tenant that doesn't pay won't cost you an arm and a leg. You'll be able to get them out in a month.
Exactly. Now let's take a look at what the numbers actually look like Toronto versus Calgary, because, you know, wherever you're investing, the ultimate goal is to make money. You know, let's be serious. So where are the markets that have the best potential for growth? Well, looking at Toronto, you know, historically over the last 10 years, you have done fantastic in the GTA market. But over the last year, Toronto and the GTA has really been struggling because there had been so much price appreciation. And just look, you know, condos, the benchmark is actually down 1.3%. The average condo price is $682,000. Compare that to Calgary. The average price is less than half of that, about $313,000. But the benchmark condo is actually up 19%. This is out of date by a month now. It's actually higher now. And why? Because you're seeing record population growth in Calgary, the most number of people ever moving to the province, huge numbers of international immigrants, but also huge numbers of interprovincial immigration and migration as well, mainly from Ontario. People in Alberta had left to go to Ontario for greener pastures over the last 5 years. Now they're all returning back home because, hey, the economy is firing on all cylinders. They're running a surplus. They're diversifying away from oil and gas. And all of that huge demand is putting huge pressure on the real estate market. You're seeing prices go up significantly. You're seeing rents go up double digits. You're seeing housing shortages in the city overall. That is not going to disappear anytime soon. So I think you're going to see strong appreciation for at least the next several years, but I'm even forecasting longer than that because I think Calgary is really growing into itself now. It's the fourth largest city in Canada, but it is really firing on all cylinders and it's really maturing. And people are starting to see that. You know, back 3 years ago, absolutely no one was talking about Calgary. Nowadays, it is a household name and destination. I think a lot of people even know someone that has moved to Calgary already. And the number of inquiries that I get alone every single day about people moving, not even considering now, but actually moving to the province. I just had one this morning. Is mind-blowing. And I think you're going to continue to see that because of the amazing work-life balance, affordable lifestyle, everything that the city offers.
Kyle, I'm going to just share one quick slide here. I'm going to take your screen sharing abilities and give some power to myself here. There we go. Can you guys see my livability screen?
Looks good.
Fantastic. So this is something that I wanted to show today because the numbers kind of came in. So what you're seeing on the screen right now, there's two diagrams. First, you'll see what the median after-tax income is for Canadian families. you'll notice that the Canadian average is just under $72,000. If you can take a look here where I'm circling my mouse, Alberta, it's 92,300. So that is over 25% more than the Canadian average. And then you look at the other major provinces, or the provinces that host the other major cities in Canada. Ontario is just slightly above the Canadian average, and so is BC. So Alberta has nearly a 25% increase when compared to Ontario and BC. And that, coupled with what percentage of the household income goes towards home ownership in Calgary, you're looking at 47% of what a family makes goes towards their home costs, whereas in Vancouver, it's more than 100%. So what does that mean? Most families are in debt. In Toronto, you're looking at 85%. The Canadian average is 62.5. So Alberta is outperforming the country when it comes to the income that families have, and it's outperforming the country when it comes to the percentage of that income that goes towards housing costs. So another reason why owning property in a province like Alberta, specifically Calgary, can really truly help you start to establish a strong real estate portfolio that you'll be able to leverage to grow your portfolio and, again, build a more robust investment for you and your family. And I'll stop sharing now. There we go.
Awesome. Awesome. So why don't we talk about some of the opportunities, Nish, that people can invest in today?
Yeah, fantastic. So there is a phenomenal 5% promotion that's being offered through Truman Homes. It's only going to be good for another few days. I think the end of the weekend, the 18th. We may be able to extend it. I'm not sure, but pretty much.
I don't think units are even going to last that long. They've sold over 150 in the last 2 weeks.
Wow. Okay, so there you go. So you're looking at putting down only 5% until closing, which can be from 2027 to 2028. We have 2 projects that are outside of the downtown core in Calgary. It's called Mine Condos in the northeast in Cornerstone. And then you have Orson, which is in the southeast, Wolf Willow. 2-bedroom condos are in that higher $300,000 range. They come with 2-year rental guarantees, 2 years of free property management, and 2 years of no condo fees. They include parking and a locker. Then we have another downtown project that will most likely sell out in the next week. It's called Imperia Condos. Fantastic location at 12th and 4th, which is smack dab in the Beltline. And that is a higher scale project. Units, I believe, that are remaining are in the mid $400,000 range. And they also come with rental guarantees, free property management, also 5% down. There's cash back options. If you want to put a little bit more down, you'll get some significant cash back on closing. And Imperia closes also, I want to say, in early 2028. That's the projected time frame. So that's available. We're launching Lincoln, which is Imperia's counterpart, which is the brand new downtown project at 11th and 2nd Avenue. It is a beautiful 36-story landmark tower with a brushed gold exterior. Fantastic amenities. There's a pool, a podcast studio, a virtual gaming room. I mean, it's just, phenomenal. There are going to be a variety of different floor plans available, starting from 1-bedroom, 1-baths, all the way to 1,400 square foot units on the penthouse floors 33 and 34. All those details will be made available to everyone early next week. But please, if you have any questions and you want to start getting your name on the list, you can reach out to us. We'll be happy to get you on. And to echo the points that we mentioned earlier, if you really want to talk about an investment that has the potential to provide some significant returns as you're waiting for it to be built, Lincoln and Imperial, Lincoln I'm leaning more towards, will probably be one of the best options that you'll see.
Well said. So we'll get into some Q&A that we've received. Do you have any townhome options with an additional suite? No. because typically you cannot put a legal basement unit into a townhome because you can't put the separate side entrance, and the bylaws typically in Calgary will not allow it. You don't have enough room, enough lot line and parking space for it. We do have semi-detached and detached options with the legal basement unit though as well, a few different sites across Calgary. So if you're interested in that, definitely book a call with either myself or Niche and we can go through the options for you.
And the prices weren't too different. Townhouses were in the mid 500s. The duplexes that we have that Kyle mentioned that has the option to add a legal income suite with a separate entrance are also in that mid 500 range. So there are opportunities to double your income potential with one property.
What are your thoughts on Chestermere and Airdrie? I love, love, love Chestermere. It is its own separate city just east of Calgary, but you are still so close to the downtown core. You know, it's like 20 to 25 minutes, so much so that you're actually closer than a lot of the new developments happening in North and South Calgary, because Calgary kind of is tall and skinny, and Chestermere is just on the eastern side. So I really, really like it. You have Lake Chestermere there. You have the purple bus rapid transit line now going through the city. It has a very high average income, very family oriented, mainly people, executives, management level, very safe environment. You have East Hill Shopping Complex, which is nearly 1 million square feet of retail, less than 5-minute drive away with a Costco, Walmart, and RioCan owns that, and they're looking to expand that further. So I'm very bullish on Chestermere, and I own a property just on the very edge of Chestermere there as well.
Yeah, it's fantastic. It's there are options. We have duplexes in Chestermere right now, and I have two properties there that will be coming up end of this year and next year in Chelsea. But as Kyle mentioned, it's one of these executive areas where if you're looking at appreciation and the income of the family households, you can kind of guess where the value of the property is going in that area.
Yeah. Airdrie, I'm not as excited about. You're not seeing as much development, and it's mainly because it is quite a bit removed outside of the city of Calgary to the north. So you're talking a pretty good drive just to get there, let alone even to get downtown, to get to the airport, to get anywhere else. So there is development happening there, but I would personally rather be in Calgary, or if I'm going to go outside of Calgary, Chestermere is about the only other one that I would personally consider. There's Okotoks, Cochrane, a bunch of other ones, but I would rather be in the city of Calgary.
Absolutely, because you're looking at this from an investment standpoint, I'm guessing, for the individual that asked the question. Now, if you want to go and live there and you want to be away from, the hustle and bustle and, more green space, it might be the place for you, and there's nothing wrong with that. However, if you're looking at getting the best return on every dollar that you're investing in, to Kyle's point, you want to be as close to Calgary as you possibly can be.
Does anyone have any other questions? Then please just type them in the Q&A box. All right, it doesn't look like it. Well, again, if anyone does have any questions, feel free to book a call with Niche or myself. I'll put our contact information up on the screen right now.
We did get a hand raised. I'm going to butcher the name. Is it Chiseld? If it is, please type your question in the Q&A and we'll be able to answer that. Here we go. What do units start at for Lincoln? So the 1-bedroom units, they begin in the high 400s, 490-ish or so, plus GST. And the prices will be released, I believe, on Monday or Tuesday of this coming week. As soon as it's available, we will definitely let everyone know. And with pre-construction properties, when you buy, the higher you go, of course, you're going to be adding a premium to each floor. But to what we mentioned earlier, the great thing is with the rental guarantee program, your rental income is proportionate to your purchase price. So if you're buying a similar property on the 3rd floor or on the 4th floor, and you're comparing that to a property maybe on the 20th floor that is costing you a lot more, you're also going to be making a lot more in terms of your rental income. So we will definitely release the prices as they become available to us. Do you have to be pre-approved for mine project for the 5%? So we will definitely get in touch with you. We can help you through that process. There's really not a lot that you have to do on your end to ensure that the financing is available. We will help take care of that for you. And truly, this project is going to be ready in 2028. So anything that's even required on a piece of paper doesn't really hold its weight after 90 days. But in terms of the due diligence, we can help you with that. We've never had anyone not been able to move forward simply because of a piece of paper.
And if you did want to move forward with a unit, what are the next steps? Well, we help facilitate the entire transaction from start to finish, but we're also there afterwards as well. If you need anything real estate related, we have strong connections across all of Canada where we can find a trusted partner to help you. Now, if you did want to move forward with a unit, all you need to do is complete a registration form. That is the information that's required for the developer to actually prepare the purchase agreement. And you need a picture of a driver's license or passport. The developer then actually prepares the contract. It's typically automated, so you might even receive it the same day. They're very, very quick. Truman is very efficient. And once you get the contract, you're typically asked to sign it. Now, what you're going to say is, I haven't had time to read it. I want to take my time, have the lawyer review it. Well, yeah, that's what the 10-day cooling period is meant for. This is protected by Alberta law, where you're given 10 calendar days to read the contract, do any due diligence that you need to be 100% confident with your purchase. If you wanted to get a mortgage pre-approval, do it. Have a lawyer review, do it. Go to the site. You can look at the empty lot or the field, but whatever you need to do, you can be 100% comfortable. If anything comes up in those 10 days, you are legally allowed to cancel the contract with no fee and no penalty, because we want you to be 100% confident in the purchase that you're making. But not only that, it is protected by Alberta law as well. So very, very simple. Just complete the form to start the process.
And we recommend that you do get a lawyer review because you need to be comfortable with where you're putting your hard-earned money. The one thing that both Kyle and I can say is we have worked with this developer. My properties are through this developer. I don't get any special fees, rates, or extended deposit periods. I pay what you pay. And myself and my family, we made the wise decision to go with this developer because the contract is what the contract is. There's nothing hidden. There's no hidden clauses. They're not going to try to trick you like other developers that I've worked with in the past have. But again, you need to be safe with where you're putting your hard-earned money. So that's why I utilize the 10 days to do everything Kyle mentioned. Do your due diligence. So you're comfortable with the decision that you're making.
Yeah, and the other downtown project is Imperia, for the person that had asked. Also a fantastic project. There's just limited units still available because it's been so popular. It is quite sold through, but now it has an amazing incentive package on the remaining units as well.
Yeah, I had a client pick one up just this week.
Nice. Yeah, pricing starts in the high 400s for 1 bedrooms. The 2 bedrooms are in the 6s, the low 6s. So very attractive price point when you compare downtown properties.
Yeah, and they come with cashbacks as well. So there will be a price point, but if you decide to go with the deposit structure, then you're going to be able to knock off anywhere from 20 to 25% off that price in pure cashback on closing.
Awesome. Well, I think that wraps it up. So wanted to say thank you everyone for attending. Really appreciate taking your time out of your day today. I hope this was informative. We're very passionate about pre-construction. That's what we live and breathe, but that's what we invest in ourselves. So leverage our experience. And if you want to take the dive into it, we are here to help you. Book a call with us, get in touch, and we will help you and help you not make those mistakes that we have done in the past as well. We want to make your real estate investing as simple and as easy, as stress-free as possible. And we want to build wealth together. So let's do it.
Fantastic. Well said, Kyle. Thanks, everyone. Have a wonderful remainder to your week. Have a great long weekend and get ready. We're going all out early next week, Lincoln. So we're going to bombard everyone with content.
Awesome. Bye, everyone. Take care.
Take care. Bye-bye.